Welcome to Conversations. Today is the 12th of May 2015 and we are in London for another UK chapter monthly meeting. Today with us is Clare, Flynn, Levy. Clare, thank you very much for accepting our invitation to present.
My pleasure.
We will be speaking to Clare, and she's probably one of the most technically sided speakers we've had so far on the issue of analyzing trader performance, and we will be very keen to watch her presentations. But for now, Clare, would it be possible to give us some information about your educational background before your current endeavors, which you'll be, of course, explaining to us later on?
Sure. Well, I'm American born. I was educated over there in a liberal arts college. I went to Columbia University for my undergrad and did a degree in economics. I worked on Wall Street during university and then ended up coming to London to study at the LSE. And then came straight back after I graduated to take a job as a trainee fund manager at Morgan Grenfell Asset Management. That's back in 1995, so quite a long time ago now. And I've been here ever since.
At the early part, you were doing buy-sides. Did you get to use technical analysis, and how did you get transition from that to behavioral finance and checking manager performance?
Do you know, I didn't use technical analysis at all, and I think that I probably fell prey to the bias that fundamental stock pickers often have against technical analysis. I think I was brought up, as it were, to think that that was silly and don't pay any attention to it. We're fundamental stock pickers. We're not here to time things. What I've realized, after many years as a fund manager, is that I was making timing decisions. I just wasn't doing it in an educated way. So by not having studied technical analysis, I was actually at a disadvantage, I think. Now, of course, that I'm involved in technology to monitor and help improve manager performance. It's all about behavior, and now I get it about technical analysis.
Currently, you are the CEO and founder of Essential Analytics. Would it be possible to give us, of course, talk about the firm and also your day-to-day responsibilities of the firm?
Sure. Well, Essentia is a software company. It's only 2 years old, so it's a startup in the authentic sense. We are a team of 15 people today who have a vision of creating software that helps professional investors play to their strengths and avoid their weaknesses. And that's really born of my own experience as a fund manager, where, as a fundamental stock picker, I spent all my time trying to identify companies that were doing a good job of maximizing their return on energy expended, or their return on capital expended. In my case, looking at my own life and thinking, how do I just do more of what I'm good at and less of what I'm not good at? I couldn't quite get my head around how to do that, and I think most professional investors have a lot of scope to improve their ability to understand what they're good at so they can do more of that, what they're bad at so they can do less of that. But to me, and I was always an early adopter of technology, so I've always looked to technology as a solution. To me, technology is the solution. It's a question of making it convenient and simple to capture data about why you're doing what you're doing. Technical analysis might be one step in what you're doing. Fundamental research might be another step. There are lots of different processes that people have about, in making investment decisions, and yet there's very little keeping track of the process that goes on. And yet, how can you prove that the process works if you're not keeping track of it? Or how can you hone it if you're not keeping track of it?
Which brings us to the next question. Okay, now that you have the performance data, how do you analyze the manager's performance past I was making X amounts per month, per year, per quarter, and that was my drawdown? What other kind of statistics, or at least non-popular ones, can you get the information about their performance or decision-making process?
Well, so we're starting with trade level data, and we're looking at every single trade that a manager has made, and then grouping those into episodes. And by looking at episodes in and out of a given stock, and today we're focused mostly on equities, but the same concept applies in other instruments. What we're looking at is how well have you timed your entry, and that's judging it based on a window either side of the date that you actually entered in each case. At what rate have you scaled into your position, and what size did you go to, and how did that compare to your conviction level or what you said you were going to go to? How long did you hold it? Does that map to what you said was going to be your holding period? Did you trade around a lot once you were in there? Did that add value or not add value? And then on the way out, how quickly did you scale out? Should you have just got out straight away or tiptoed out slowly? Is there any pattern in your behavior around that?
So that means you probably need to capture data other than trade, which also means that they're thinking before the trade, during the trade, and afterwards.
At a bare minimum, what we're looking for is trade data, and we can tell you quite a lot about your own performance and your own behavior from just your trade data without knowing why you're doing what you're doing. We add in market data, so we understand the context of, what was the market doing when you were behaving like that, and is there any pattern in that? But then we're interested in even just the basics of why. So, what was the basic thesis behind your trade? Was there a particular source of information you cared about? Was there a broker involved? Was there an analyst that you were relying on? Was there a particular technical pattern that you saw that that spurred you to buy it or sell it at that moment? How strongly did you feel about it? How long did you intend to stay in there? Any one of those data points gives you an exponential increase in the amount of insight that you could be getting out of the data.
What's the usual client feedback you get from having used your services in terms of, I had noticed that. I thought it was different, but then like surprise elements from the results coming from this analytical process?
More often than not, what we get is, I had a feeling I was doing that, but I didn't know it for sure. Now you're telling me, okay. Now I can do something about it because I have data to prove it. Sometimes it's, you see something bad that you've been doing, a mistake you've been making over and over. Sometimes you see, actually, I am really good at picking contrarian trades or, turnaround situations or whatever. We've seen clients feel more confident putting on bigger positions because they've seen the data to support the fact that they're actually good at that. That is something where they consistently add value. And that means that they end up making more money because they're putting a bigger bet on their own skill.
Which have been your greatest influences so far from a knowledge or a motivational, inspirational point of view? If you had to recommend 3 books, for example, which ones would this be?
Wow, 3 books. I read so many books in the category of behavioral finance and everything sort of associated with that. I love Michael Mabison. I love James Montier. These are, your familiar guys in behavioral finance, but they write in such a way that makes a lot of sense to a professional fund manager because they're coming from the industry. I'm reading one right now that is called Essentialism, which is really interesting. I can't think of who the author is, but it's all about doing less. And this is ultimately the premise behind Essentia, which is why it's a coincidence that that's the name of the book, but the point is, what if you could work less, but just work smarter and make more money? That sounds like it's too good to be true, but actually we spend so much energy spinning our wheels doing stuff that really we have no business doing. And this book is not specifically about investment, but it's about that concept of figuring out where do you get the best bang for your buck and stop doing everything else.
Let's take this a step further then. Say behavioral finance principles. If you could distill your experience, speaking with fund managers and being a fund manager yourself, into 3 axioms, which one would this be?
Let's see. I think, well, certainly if I was going to distill it into the biases that we see most commonly, they're generally around loss aversion. So maybe axiom number one is focus on your exit. Most people don't pay as much attention to the exit as they do to the entry, and exiting is where we see a lot of errors made. People hanging on to losing positions for too long or cutting winning positions too quickly, which is basic disposition bias and very familiar in the behavioral finance literature, but it's something that professional investors do, and obviously non-professional investors as well. So that's probably one of them. Another one would be around the endowment effect. So use a clean sheet of paper is probably how I'd put it. You know, actually going through your positions and saying, would I be a buyer of this today? If I wouldn't, why am I holding it? Most fund managers have lingering positions in their portfolio that they're holding on to for one reason or another. Sometimes it's because it's actually just a reminder to them that position needs work, which is a pretty expensive way to remind yourself to do something. Sometimes it's just because, I put a lot of work into that before. You know, that's a bit of a IKEA effect bias where, you know, you've invested energy in it, and so therefore it's more valuable to you than it would otherwise be. So that's definitely number two. Number three is just get in the habit of recording things, and that's maybe to avoid hindsight bias. So, you know, we all have a story that we tell ourselves for every position we've ever held about here's what happened, here's why I bought it, here's, you know, why I sold it. None of that is real, you know. It's not that you're making it up on purpose, but your brain is just not ever going to remember it exactly how it happened. It's telling you what makes sense now. So getting into the habit of just even writing a couple of lines once a day can help you to actually record what really happened.
If you could call up 25-year-old Clare and have a chat with her about when she's, you know, entering the financial services industry, what advice would you give her?
Wow. So much advice. I think, you know, I never had any formal training. I joined the industry. I was trained by being there, and I went to the odd course to do my IIMR exam, as it was called back then, the sort of CFA type thing. Practical training on how to invest and how to run an investment process and why, and you know, any of that. I didn't have any of it, and I think I could have asked for it. I probably wouldn't have got it because the people I was sitting next to hadn't had any either. But I could have maybe taught myself, or done more to, you know, advance my practical education. I just did what everybody else did, which was to go with the flow and take credit when it was going well, and maybe beat myself up when it wasn't going well, or else blame somebody else.
Got it. Okay, so fun fact, what does Clare do to relax outside of market hours? Do you have any hobbies or interests? I mean, what do you do to get your mind off of markets and running Essentia?
Well, I have a 3-year-old and a 6-year-old, so mostly
Your hands full.
yeah, roll around on the floor with small children and wipe noses and that kind of thing. If and when I actually get time to myself, which is almost never, I love reading novels. You know, for me, at the moment, it's a real fight between reading work-related stuff, because there's so many fascinating books out in the field of neuroscience and behavioral finance, and I can't get enough of that. But at the same time, I love the escapism of reading novels. So I've given myself permission to alternate one after, you know, one work one pleasure one, and that's my hobby.
Got it. Okay, Clare, thank you very much for the opportunity of this interview. It was great to have you here, and we're looking forward to your presentation.
Thank you.
And I think that wraps up today's MTA podcast. In a little while we will be watching Clare do her presentation, which will be recorded and put on the MTA website archives. This is Alex Piroglou. Greetings from London. Thank you very much.